Good morning, traders. Happy Monday. It is the 22nd of February 2016, 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight sentiment is pretty strong. Oil's up 5.35% or thereabouts. Actually, it's higher now, 5.7%. Gold is down 1.5%. U.S. Treasury futures. The bonds are up 0.75 or down 0.17%. The 10 year is down 0.13%. The bunds are flat. The Asian markets, the Nikkei is up 0.9%. Hang Seng's up 0.9%. The Shanghai is up 2.37%. The Japanese yen down 55 bips. And the Eurozone equities, DAX up 1.73%, FTSE 1.34%, and the CAC 40 1.62%, all strong. U.S. equities up around 1.1%. The U.S. dollar is up 94 bips as well. So clearly, the risk appetite is on. The market's allocating funds to risk, and therefore the markets are higher. And that's what's shaping up for today. As far as expectations for what's coming, what's on deck at 8:45 Central, 9:45 Eastern, we have U.S. Market manufacturing PMI. The expectation is 52.5. And that's really it on the calendar today. It's pretty darn quiet. Let's take a look at the technical picture. That must be a record, getting to the technical picture within 2 minutes of starting the Trader Bite. The technical picture, very interesting. We are continuing on with what was discussed last week on Thursday. On Thursday's Trader Bite, the expectation on Thursday was that we would eventually start heading towards the 1940. You can see the 1940 is the last key high up there. 1941 composite LVN, and 1940 is the 50% pullback of the drop of where the energy came from in the drop. Through January. So this area is key here. This 1940 is very important test for bulls. The expectation is it would push through by a few ticks, fall back down, consolidate, potentially drop again, consolidate, and then push through, consolidate, and then continue higher. The next key value up is actually 1950 right here, this high volume node. But other than that, the expectation is for today, when we look at the overnight here, it's fairly strong, very short covering profile, P-shaped profile right here. The market ran away from the open and has not looked back. The point of control is near highs. The highs is fairly weak. So overall, the expectation is that we would take out the overnight high. We are opening in a gap. Looks like 1934.75 is where we're trading. The prior range high is 1916. So about 18 points below. And then we have I built this composite here. This micro composite of the last 3 days, and you could see that there's a pretty strong skew higher. If we pull up the statistics on this composite, you'll see that down here, you'll see that there are 3.53 million contracts below the point of control. Point of control is at 2275, and 3.68 above, with only 7,000 delta, positive 7,000 in this area, even though the profile has most of its volume beneath its point of control. The delta is way off. And so what you're likely to see is that this profile eventually stretching out and becoming more normalized through today's action. So I'm looking for, let's switch back. All right. I'm looking for today's action to show us that um, we would probably push higher on the open, take out the overnight high, chop, and then retest this 1927 area, and the target would be 2275 on the downside. If we get responsive on the open, then I expect it to push down into the 31, which is a double point of control. I'll show you where that came from. I actually didn't review yesterday the prior day's hypothesis yet. I'll do that. But you can see a double point of control right here from these 2 days. The last day of January, the 29th, and the first day of February, the 1st. We have a double point of control which carries over. It's 1931. Uh, the point of control is 1931 and the close is 1930.50. Still naked. So I'm looking for it again to take that out and then potentially test into the 22, the 27.25 with the extended target being the 22 MC point of control today. Again, if it pushes through, then I expect it, if it pushes lower, and that's a second hypothesis, I expect it to chop around in this area, potentially push down, and then eventually catch up and take out the overnight high. That would be the secondary hypothesis, not the primary. Okay. So that's the idea for today. Looking back, so I'm stepping back now. Looking back at what we did on Friday, this is the video from last Friday. This was the second hypothesis. The primary hypothesis was drawn just before that. Let me get to that here. The primary hypothesis actually operated exactly in reverse. The market was expected to push higher and then push down to the mid. Oops, to the mid of this gap zone. And what we ended up doing is we ended up pushing to the mid of the gap zone and then pushing up and then getting stuck up here. So it was almost exactly the opposite of what Hypo 1 was. Hypo 2 was more of how things worked. Let's see. Hypo 2, here it is, the push down, chop, and then push up into this 1913, 1915 area. And that's basically what we got on Friday. Let's zoom into that. There it is, the low being against the mid, just as shown, and then it ended up floating up to 1916 and closing the gap right there to the tick at 1916 and floating sideways for the rest of the session. On Friday, what we had is very interesting. It looked like the shape of the profile. Look at how terribly weak this high was on Friday. Look, the shape of this profile just screams higher. We had that 1916 touch, and then we had multiple touches with some heavy volume. We had the point of control against the high of the section with an upward skewed profile, very plateauish. We don't see this often at all, where we have what looks like a shelf in volume. We see this a lot more in market profile, but not in volume profile. This profile was just screaming higher to extend this profile up again. It puts 1940 in our sights, and that's how things are shaping up for today. Anyway, my goal is to keep these videos down to 10 minutes and keep them very quick. It is Monday, though. I just want to show you the overall weekly profile. We still have that gap beneath us. We still have that weak structure beneath us. And again, we're looking to reach out to this 1940 area, and then beyond there, we would be targeting the 1915 and 1970, above 1970 being a gap zone, a tiny little gap zone and a single print right there. 1970, that would be the next area to look at. Okay, so that's how things are shaping up. Overall, this is a very corrective move here, a W-shaped corrective move with the pivot of the W at 1940. And that's all I had for you for today. Good luck, and I'll catch you tomorrow. Take care.